Well, happy end of May, everybody. This is your host, Angie Hughes. I'm hosting my monthly podcast called Producers XL Persiflage. And this month, we're going to be talking about life insurance after the age of 65. Um, Before I get into that, we are all getting back to the grind after the Memorial Weekend, and I hope everybody had an opportunity to say their thank yous, give their memorials to those that paid the ultimate sacrifice for this country that we all participate in. And just wanted to give a little shout out to that, as I know today's Tuesday, everybody's weeks are going to be off. We're going to kind of feel like this is the shortest, longest week we've had because we weren't at the office on Monday. So we'll kick it off on this Tuesday with this month's podcast. Again, like I mentioned, talking about life insurance after the age of 65. And does it still make any sense? Is that something that we should consider, or is there that a magical age where we can just kind of let life insurance go by the wayside? So, once people hit the retirement age, one of the most common questions that they ask is, do I even still need life insurance? And honestly, it's a fair question. For years, life insurance may have been tied to raising the kids, paying off a mortgage, replacing income during working years. So once retirement arrives, many people assume life insurance becomes unnecessary. But I think today's retirement landscape actually looks very different than it did 20 or 30 years ago. I'll explain a little bit. So people are living longer. Healthcare costs just keep going up. Families are blended these days. And many retirees are really realizing that life insurance after 65 isn't always about replacing income anymore. It's about protecting everything that we've worked so hard to build. So today, let's talk about when life insurance still makes sense after 65 and when it may not. So in the first little segment that I want to talk about is why many people think they no longer need it. So let's start with why people often believe that maybe life insurance no longer matters in retirement. For decades, life insurance was usually sold around one major idea, right? Income replacement. If something happened to you during your working years, the policy could help your family pay the bills, stay in the home, maintain stability, keep kind of everybody comfortable in their previous environment, minus that loved one. So naturally, once retirement arrives and the paychecks stop, people often think, well, I guess the need is gone. And sometimes that can be true. If someone has substantial assets, no debt, no dependents, enough retirement income for a surviving spouse, they may truly not need any coverage anymore. And that's important to say. Life insurance isn't automatically right for everyone after the age of 65. But what surprises many retirees is that the purpose of life insurance often changes instead of disappearing. So in my next little segment, we're going to talk about, the needs change, they don't always end. And what do I mean by that? Retirement creates a whole new set of planning concerns, right? For example, what happens to a surviving spouse financially? How are final expenses handled? What if healthcare costs increase dramatically? Often extended care needs come in our minds for that. What happens if one spouse needs care for several years? And will assets have to be liquidated at the wrong time? These are all big planning concerns that hopefully you're bringing up, with your clients, because these aren't hypothetical questions anymore. These are real retirement realities, the triple R, real retirement realities. And polls are taken with consumers, with retirees. We've all heard it. What keeps you up at night? Those are the questions that keep them up at night. So, as their advisor, we need to be asking those questions and making sure that their plan is in place to handle that. So, let's kind of dig into each one of those a little bit. This segment, spousal protection. One of the biggest overlooked issues in retirement planning is what happens when one spouse passes away. Here's the reality. In many households, when one spouse dies, income decreases, but expenses often don't decrease nearly as much. One Social Security check may disappear. One pension payment may reduce. Investment income may shift, and healthcare costs can actually increase for the surviving spouse. We are watching this play out in our family dynamic where mother-in-law is a widow and has been for several years, almost a decade now. And her healthcare costs, as her health declines, her healthcare costs, even though she's on Medicare, right, and has her gap coverage, but her costs are increasing. It's taking all three of us grown adults with 3 full-time jobs to manage her, as well as, the ability to drive. And so we're watching those healthcare costs increase because we're having to hire services to help us manage that, and trying to manage it with dignity. So those types of things can create financial stress during an already emotional time. But life insurance can help provide that immediate liquidity and financial breathing room so the surviving spouse isn't forced into major financial decisions under pressure. And it is a lot of pressure when you have, a widow that's left trying to figure everything out when they used to have a teammate to navigate all that with them. And now they've got to fold in either their financial advisor, they've got to do all the conversations with their property and casualty. They've got to negotiate everything. They've got to go through all of those trials. Some of them are fortunate enough to have kids that get involved and do it from, the grace of their heart. Some of them do it from a greed perspective. So there's a lot. And that kind of takes me into this next segment where we're going to talk about final expenses and legacy. Another reason people keep or purchase life insurance later in life is very simple. They don't want financial burdens passed to their family. Financial expenses today can be substantial. Funeral costs. We've all seen those numbers. They can be anywhere from $10,000 to $30,000, depending on how elaborate you want to get. Final expenses also include those lingering leftover medical bills, and they can be pretty high. I know with my mom's passing, there were still a lot of medical bills. Of course, taxes. I mean, we're all looking to be tax efficient in our later years, right? Watching those incomes and those IRMA thresholds and everything that goes into play with that. Debt. There could still be debt lingering out there. If you look at the social studies that are done today on the financial wherewithal of the the population out there, you'll see that there's a tremendous amount of debt that is held by American citizens today. And so then we're also, some of the things in final expenses are estate settlement costs. So many retirees simply want those expenses handled cleanly and privately. And I would probably emphasize that privately. There's a reason a lot of times where the kids aren't involved in their parents' financial affairs. I mean, you think about when you're raising your own kids, they're not involved in your financial affairs. However, sometimes they have to step in. Well, if you have life insurance, that can actually be that funding mechanism to keep things private because you now have the resources to pay for what you need to. Maybe that, saves the dignity and saves the legacy as well. So for some families, um, you know, others want to leave something behind intentionally, a gift to a children or grandchildren. They want funds for a charitable organization, or simply just a way to transfer wealth efficiently. And life insurance does all three of those things very, very well. And so for some families, life insurance becomes one of the most predictable assets in their estate plan, something they can actually count on. So I want to talk next about next section, healthcare and long-term care concerns. This is where conversation has really evolved in these recent years, right? We all know this. Life insurance products today include chronic illness rider, living benefit riders, long-term care riders. These are all features that allow you to access these benefits during your life as a living benefit if a health event occurs versus life insurance just being viewed as a death benefit for the surviving spouse. So for retirees, this can be incredibly meaningful. We are seeing that life insurance with some form of a chronic illness or a long-term care rider are very, very popular these days. Quite frankly, being sold quite often ahead of any traditional long-term care sales. Now, what you didn't hear me say was traditional long-term care is dead, because I do not believe that. It is still very viable and it is still sold today. But because it is one of the greatest fears many people have isn't death, right? It's becoming a financial burden during life. It's who's going to provide care. And when you stop and think about if you're a widow or your clients are widows, that does come into play. Especially when you're in that boomer generation, their adult children are still actively working typically. So it is something that does keep them awake at night thinking, oh my goodness, I don't want to outlive my money, but what happens if I have an extended care? How am I going to pay for that? Now, these products, these life insurance with chronic illness and long-term care riders or any form of a living benefit, right? They're not a one size fits all, and they're not really meant to replace comprehensive long-term care planning in every case, but they are, they truly can create some additional options and flexibility in retirement. So 100% they should be brought up as a form of an income stream to pay for care when it fits that client's needs. But let's talk about why timing matters. One thing people often underestimate is how much timing affects life insurance after age 65. So there was, in one of my podcasts, we had talked about, kind of that life mortality, that life expectancy, that life insurance prices policies with, right? It's based on mortality. How long are you going to live until you die? Then there's morbidity, which is how long are you going to live before you are sick and can't take care of yourself, but you're not dead. And there was something called kind of the health span, your health span, which is how long are you healthy until you're not. And it was very interesting that by age 65, consumers actually have at least one chronic condition that they're dealing with, if not multiples. So one chronic condition could easily just be taking Lipitor for cholesterol. Very manageable. Maybe it's taking a low dose blood pressure medication. Very manageable. Those aren't necessarily life-changing, but we all know, right, as we age, we typically don't get healthier. So kind of thinking about timing and how that matters. The earlier someone explores options, the more choices they typically have. We all know this. We know this. Health matters. Age matters. Insurability matters. So waiting until after a diagnosis or a major health event, right, can significantly reduce options or increase costs substantially. If you go from a preferred non-smoker to a table 5 for life insurance, pretty big swing. So catching them while they're still healthier is obviously better. So most of the time, folks aren't necessarily looking at life insurance at age 65 unless it's a final expense, simplified issue, guaranteed issue. But there are still many folks out there that are very much insurable at age 65 and older. And that's why planning conversations are often more effective before there's an immediate need. And that's on us. That's on us being brave enough, having the courage enough to step forward and asking those questions of your client. We probably need to have a planning strategy. Do you meet with your clients at least once a year? Do you have these conversations about changes in the next stage of life? But let's talk about now when it may not make sense to carry life insurance after the age of 65. Um, I think it's important too. There are absolutely situations where life insurance may no longer make sense. If someone has more than enough assets, but then there could be an estate tax issue. And so life insurance is a great way to leverage that. Maybe they have no dependents, nobody to leave a legacy to, a death benefit to, has no legacy goals, has no concerns about healthcare related financial strain, or would rather use their money elsewhere. Now, I find that interesting because I say there might not be a purpose or where life insurance might not make any sense. But to be honest, have you ever come across one of your clients that's actually hitting all of those? They've have got more than enough assets, no dependents, no legacy, don't have any problem thinking about their healthcare events later in life, don't care how much they're going to burn through, use all of their assets. Then maintaining or purchasing the right coverage might not be a fit for that person if they're actually hitting all of that. But I don't know a whole lot of people that are truly hitting all of that and could say, maybe I don't need any life insurance. Good planning isn't about forcing a product into every situation, right? It's planning and what makes sense for that particular client. It's about understanding their goals, finding the tools that support those goals appropriately. So, does life insurance still make sense after 65? For some people, maybe not. But for many, many others, the conversation just simply changes. It becomes less about replacing a paycheck, more about protecting a spouse, preserving retirement assets, creating flexibility for healthcare concerns, and leaving behind stability instead of stress. Retirement planning today is more complex than ever, and asking those thoughtful questions early can make a tremendous difference later for your clients. Life insurance later in life isn't about fear, it's about foresight. So I want to thank you so much for joining me this month, the month of May, wrapping up our podcast. And be sure and join me at the end of June 30th. I'll go live again and we'll have another podcast with another exciting topic. I wish you all a wonderful week. Remember, today is Tuesday, even though most of you were not in the office yesterday. We were celebrating Memorial Day. And have a wonderful week, and we will talk next month. Thank you.